What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me tonight. Tonight, I wanted to go over with you a couple of different charts. We're going to look at the gold chart from 2 weeks ago and the Bitcoin chart from last week. And I want to show you some of the easiest, low stress, no thought type of trade opportunities that were there for us, okay? And I know this is a little change of pace for us. Usually I'm talking about the DJ30, but I'm trying to broaden my horizons. So today we're talking about gold and Bitcoin, all right? Now, I'm going to try to translate this information to you as simply as possible, all right? We don't even need to talk about 3-day setups, trigger days, day counts, or any of that, all right? Essentially, every single trade we take is going to look similar, all right? They're going to share some key characteristics. Now, we know from following Stacy Burke's work that we are only trying to enter the market at 3 different levels: the high of the day, the low of the day, or the previous day's closing price. All right? Keep that in mind. Now, here we're looking at the hourly chart for gold from 2 weeks ago. All right? You can see here on this Monday, we have a nice trending day, a pump day. Okay, we have a day up and then 2 days sideways. All right? But here, Monday/Tuesday, we put in a new weekly high. All right? We have an inside day on Wednesday. For us, that's a trigger day. But here on Thursday, you can see this market pops the top, okay? We put in a new high of the week. We break out of the previous day's high and the weekly high, okay? And when that happens, that's when we want to be paying attention to the chart. You can see we go just above that, we reverse and fall straight down to the low of the day. So from the high of the day to the low of the day. When we say we want to enter at the high of the day, the low of the day, or the previous day's closing price, we're not saying we want to enter at the very top of this, like precisely to the pip, okay? We're saying we want to enter somewhere around the high of the day area, okay? It's a level. It's not a specific price point. It's a level, all right? But this is exactly what we're looking for, where we come up, we break that level, we put in a specific pattern and reverse. This is the easiest type of trade that I've found to take. And once you know exactly what you're looking for, okay, then you should no longer be struggling with certain things like the fear of missing out, impatience, overtrading, because this is the only thing that we're going for, all right? And so this is gold from 2 weeks ago. You can see we put in this high, we break that high, and then we reverse. When we zoom in and look closer on the 5-minute chart, we can see here's our M pattern at the high of the week in a market that is in breakout. This red line is the previous day's high of the day, okay? So we break out of yesterday's high, then we put in this M formation, and this 5-minute M formation is an engulfment on the 15 or 30-minute chart. And the engulfments we see on this 5-minute chart, like this purple candle or this purple candle, these are actually M patterns on a smaller time frame, like the 1 minute or the 30-second or whatever. But even if you didn't want to get in up here, or you didn't feel comfortable enough to get in up here, you could have entered here or entered here. These are opportunities where we could also add into our position if we did get in over here. And we're aiming for the previous day's low. So as long as you get your entry set, you have your stop loss, you set your take profit, you can just walk away from the screen and let this thing do what it's going to do. Okay, come back in an hour or two and check up on it. This is just showing you the low-hanging fruit trade the day after. But even this can be kind of difficult to trade. It's a little more choppy. And we're not breaking any levels. We're technically trading on the inside, so it can be a little more difficult. It's not like when you see this, okay? And this is essentially what every single short trade that I take is going to look like, okay? It's going to be like this, where we break out of a level, put in this pattern specifically, and then fall, right? Now here we're looking at the Bitcoin 1 hour chart, and we're looking at the 1 hour charts to get rid of a lot of that noise that we typically see on the 1 minute, the 5 minute, even the 15-minute chart. All right. So again, here we have a pump day, 1 day up, 1 day sideways, and then a day down, followed by the low hanging fruit trade in the New York session. So you can see here, Monday puts in a new high of the week. Okay. And then once we get to this New York session on Wednesday, we go right back to that level and then put in a reversal pattern, which would be this. You can see we go right back up to that level and put in this M formation right here, okay? And we could enter in at this engulfment. Our stop loss goes just above these structural highs. We aim for the previous day's low, and we come back later and check on it, okay? These are the simplest types of trades that you are ever going to take, and you can really sit back and cherry pick the trades. All right, we don't want to be in here trying to trade and like catch this low or whatever you're even looking at, right? We don't want to trade a day like this. Nothing's really happening. Nothing's really alerting us to any sort of asymmetrical risk to reward trade. This is an asymmetrical risk to reward trade. We have like a 1 bar stop in here, right? Our stop loss goes just above that, because if it goes above that, we know we're no longer at the high of the day. The high isn't in place yet, right? So we're a little early or something like that, or the trade's just not going to happen. But we have this very small area of risk with a very large potential reward in these trades, okay? These are the best trades that you're going to take, and they're going to happen like this every single time. Every single week you will see trades like this. Maybe not on gold, right? But if you have that basket of instruments that you're hunting through, looking through, you will see these trades every single week. These very simple trades where we put in a level, then we retest that level or break that level and then reverse. These are the trades that I'm interested in, okay? This, if we were looking at a weekly candle, this is where the wick is for that weekly candle. Here's our open, here's our close. Technically, all of this is the wick, but this is going to be the very tippy top of the wick of that weekly candle, and that's where we're trying to get in these trades. That's where the trades are really going to happen, right? So I hope that makes sense for you guys. And I appreciate you being here, being in the Discord channel. Until next time, I hope you continue to free your mind.